The end of the day with Ray. Hello, my friends. Hey, today we're going to talk about HP's fourth quarter and year end. I'm going to get on the Sharp Interactive board. I put together a presentation. I got my magic pen in my hand. Folks, this video could take a little bit of time, but stick with me. By the time it's over with, maybe we'll all understand why 8 executives over at HP sold a total of $27.9 million worth of stock last year. So without any further ado, let's jump on the board here. The first slide I want to show you is this one, and we all know who this is, Kathy Bates in her starring role in Misery. James Caan's laying on the bed. She's got a 4x4 between his ankles. She takes a sledgehammer, smashes his ankle. His foot flops around like this. Everybody in the theater gasps. But folks, when you compare yourself to a hobbled year, a hobbled quarter, don't take it so serious. I mean, you know, when you see the grandiose statements when you're comparing yourself to a hobbled year, put some perspective into it. That's all I want to say. I've talked about this before. But let's just jump right into this, folks. I want to ask a question. Should HPQ be downgraded? Should we downgrade HPQ stock? Should we downgrade them? Should we be bearish on them? I personally believe we should, and we should be extremely bearish on them. Let me share with you the why. First thing I want to do is I want to show you this article here that was written by Barclays. And, you know, they say HP beat fourth quarter driven by commercial and premium PC growth, primarily higher ASPs, while missing the printing segment, and the guidance is reaffirmed. We still think there could be risks to 2022's guidance as we are slightly more bearish on end market growth. They're getting bearish themselves, but they say something in this article that I want to circle on my magic board here, and I want you to, because you're going to have to remember this as we go through this presentation today. Sales of $16.7 billion beat our estimates by $1.2 billion. PCs were 12% above, and printing was slightly below. Total units were down 12% year over year in PCs. Let me just circle that. Total units were 12% down year over year in PCs. Remember that. PC units down 12%. But revenue was up 13%. So what's that telling you? They were able to charge more for the PCs, but the units were less, 12% less than the year before. Is the hype getting to end? People running around buying up all these notebooks and stuff? Is it starting to end for HP? Were they able to raise their prices because of supply and demand issues, and that too will be rectified sooner or later, and competition will tighten up on the biggest growth that HP has is in that PC unit, is in that personal systems business model, right? It's not the printing business model. That's been flat for 3 or 4 or 5 years, right? No growth at all there. So the reality of it is we need to pay attention to the units being down 12%. That's a big, big number. And it's something that shareholders should be concerned about because after all, that's their biggest growth engine. So ladies and gentlemen, let me cross this off and we're going to continue on to the next slide. You got to go back in time sometimes to understand the mindset of the leaders over at HP. And, you know, back in May of 2020 on Mad Money with Jim Cramer, Enrique Loris said this: "We still think that buying back stock is good because we think it is undervalued." HP CEO Enrique Loris told Jim Cramer. We still think that buying back stock is good. I truly believe that Enrique Loris is his only goal is to buy back shares, and he wants to buy back more shares than any other CEO in the history of CEOs buying back shares. He's obsessed with it. And, you know, I remember when Xerox was trying to buy HP and everybody said how ruthless Carl Icahn was. He only cares about stockholders. He doesn't care about anything but stockholders and stock price. He's going to destroy that company. It seems to me that Enrique Loris is one we should be thinking about, is caring about stockholders. There's nothing wrong with caring about stockholders. And stockholders should definitely get returns on their investments. Their stock price should appreciate. But the bottom line is, at what cost? Are we trying to get a whole bunch of temporary gains, sacrificing our business for the future? Because when I look at HP, I don't see any innovation. I don't see anything they're bringing to the table to change the game. They're a hardware-focused company. They focus on hardware on the compute side, and they focus on hardware on the print side that they supply that hardware with, and that business is declining year after year after year. Where's the innovation? Where's the investment in innovation? And I know they talk a lot about nonsensical 3D printing aspirations, but they never share the numbers of it. They never share the cost of it. They never drill deep into what is 3D printing actually giving them. I'll talk about that further. But this is something to think about. He also says this: we think we have an opportunity of raising debt. We also will be giving back shareholders 100% of the free cash flow. Let's give them back 100% of the free cash flow. Let's buy back as many shares as we can. Let's hope that stock price gets up there. Temporary gains at what cost? What's the future of HP going to be if we use all the money to buy back our own shares to raise our price? Folks, you better start thinking about this if you're a shareholder, because I think it's a little bit concerning. Now let's talk about what Enrique Loris and his team has done. Enrique took the realms at when? November of 2019, right? That's when he took over. That started their 2020 year, November of 2019. That year ended. Fiscal year 19 ended with $4.3 billion in operating profit. In 2021, it ended with $5.769 billion in operating profit. Increased operating profit by $1.466 billion. Enrique Loris and his team increased operating profit by $1.466 billion since he took the reins to the year that just ended. But here's something I want everybody to put in perspective, okay? In October of 2019, before Enrique even took over, HP had a headline. HP to cut staff by 16% by 2022 in restructuring. The PC and print giant is reducing its headcount by between 7,000 and 9,000 employees as part of a newly announced plan. Okay, you know what? You got to make cuts. You got to cut costs. You got to change with the marketplace, right? There's nothing wrong with HP saying that they're going to cut 7,000 to 9,000 jobs back when they said that. That's something they had to do. But let's put it in perspective of what that really means to the operating profit for HP. Folks, they had an outline in the year 2019. They were going to cut 100 million. They were going to cut 500 million by the end of 2020, and by the end of 2021 and 22, they would have cut $1 billion. So they're in the last year of this $1 billion worth of cuts. How much money have they cut so far? I'm going to estimate about 750 million. So they cut $750 million in cost. Wouldn't that in essence go right to the bottom line as operating profit? Well, if you think about it that way, Enrique and his team gave $716 million more in operating profit from the fiscal year ending in 2019 to the fiscal year ending in 2021. That's 1% of revenue. And in the meantime, we gave back a whole lot of our money to buy back our stock. About $11 billion in stock buybacks, about $3 billion in dividends. Nothing wrong with dividends. Stockholders like dividends. But at what cost? At what cost do you give away the farm to try to grow the stock? Folks, and then the reality of it is, don't run around the whole world talking about what a great business plan this is and how HP's knocking it out of the park. They're not knocking it out of the park. Their only operating profit growth came from cutting costs of 7,000 to 9,000 people. That's the reality. So let's look at this other thing here. I put this up because I wanted us to look at the amount of revenue in the pie for HP's total, where it's coming from and how that's changed over the last 4 years. And I went back to 2017. So their year ending in 2017, they were at 52. Let me get my magic board working here. The year ending in 2017, HP did a total of $52.2 billion. Hang on a second, folks. I got to get my pen working. It's fun circling stuff. So they did $52.2 billion worth of total revenue in 2017. Of that $52.2 billion, 24% was print supplies. I want us to focus on print supplies for a second, because that's really that's the gravy for HP. That's always been where their profit is in these supplies. When you hear them talking about subscription ink and all that crazy nonsense, but they don't substantiate any of it, that's what they're talking about, all these supplies, right, for these printers. It was 24% of the total pie in revenue. Since 2017, it's reduced down to 20% of the pie. Now, they did have growth over there in the personal systems, which, by the way, was all the growth they had. The print business has been literally flat since 2019. It's never gone. It's $20 billion, folks. It's a $20 billion business that hasn't changed since 2019. And so the bottom line is they're $63.5 billion today, but all that growth was in the personal systems side of the business. But here's something that everybody needs to pay attention to. In 2017, their notebooks represented 38% of their business. In 2021, their notebooks represent 48% of their business. It's increased by 10%. Print supplies decreased by 4% as a total percentage of revenue. Folks, this is big. This is a big deal. If they deliver 12% less in equipment, okay, what does that mean? What does that mean when your whole growth is in the notebook sector? Are you running out of steam? And do you really want to have notebooks as your biggest core business to replace print and its supplies as a core business? Because there's nothing left after you sell the notebook. There is no reoccurring revenue. I'm sure they'll be talking about subscription notebooks, but at the end of the day, you're just swapping revenue if you do that. They either buy it outright or they buy it through a subscription, but the money coming to you is the same, minus a little bit of interest you might charge them. But let's be real. Where's the growth for HP headed? In the notebook business? You know, by the end of 2023, is 60% of their business going to be coming from notebooks? What's the pressure on the notebook business going to be as other players really start to get where they could just give them away? I think about my friends over at Dell that could care less about the hardware. They're moving into so many things beyond the hardware to collect revenue from. Will they be able to really pressure HP by giving away their notebooks as they put people into their cloud, into their storage platforms, into their telephony platforms, into service, all the things as a service that Dell's building? You see why you can't just keep buying up your own shares without investing in alternative products and services and solutions? That's exactly what's going on at HP in my mind. Folks, these are staggering numbers. Biggest part of their business drops 4% of total revenue. The biggest increase in their business comes out of notebooks, which at the end of the day is a bigger commodity than print equipment. I'm not too excited about it. Ladies and gentlemen, here's something else. Let's talk about these buybacks. Since October, since the year ending in 2019, HP has done a total of $14.6 billion in operating profit for 2019, 2020, and 2021. A total of $14.6 billion in total operating profit. They gave back to shareholders $14.1 billion over that same time period. $11 billion of that was in stock repurchases. About a little less than $3 billion of that was in dividends. But $11 billion was buying their own shares, not investing in alternative products or solutions that could help them grow beyond print, beyond selling notebooks. Nothing's bringing HP the services where the whole world is going, right? The whole world's going around services and how do we monetize services. Less focus on the hardware piece. The hardware piece will become more and more of a commodity. And like I said, will Dell one day just give away the hardware to grab the revenue from all the services? Real possibility. And HP has no services. Ladies and gentlemen, I talked about these insider executives. 8 executives sold $27.9 million worth of stock last year. Let me get my magic pen working. I want to circle this because I want you all to think about this. You know, Christoph Schnell, can't see him down here, had 3 transactions last year. I mean, I think he's pretty much out, right? I mean, he sold, let's see, 5 million. And then this one here was 1.1 million. So you got 5 million, 6 million, 6.2 million down here. Folks, what's that tell you? You know, Christoph Schnell and Ulrike Loris are pretty much the spokespersons for that whole company. Oh, by the way, Ulrike Loris, the president, the CEO, where's he at? He's in here somewhere. Here he is. He sold about $1 million worth. His average price when he sold was $27.53. He should have waited a couple of days. He made some more money. But at the end of the day, why are they selling? You know why people buy stock? Because you think it's going to go up. Why do they sell it? Because you think it's already at its level? Its highest? Christoph, pretty big action there. Interesting. Maybe he's getting ready to retire. Ladies and gentlemen, oh, I'm not done yet. Let's talk about Dell real quick, because I know Ulrike and the team over there, sometimes they probably think they're Dell, but they're not Dell. Dell had its best third quarter in its history, driven by robust demand and durable competitive advantages and strong execution. Folks, Dell ended their third quarter at $79 billion. They'll end their year over $100 billion. And I want you just to put your head around Dell and then put your head around HP. We already talked about HP. It's all product driven, really no services at all, right? It's all product driven, product and supply driven. Back in the heyday of print, it was a nice business model. But their core deliverable of print and supplies is dropping off a cliff. They're replacing all that revenue with notebook revenue to sell another product. Our friends over at Dell. Let me just read some of these key highlights so you get your head around what I believe we need to be doing at HP, okay? Some of the things they need to be thinking about over there. Introduce updates to the network attached storage, NAS portfolio. They got a storage platform, folks, software storage, smart fabric, announced edge innovations across portfolio to help organizations simplify deployments and capture more value from data generated and processing outside the traditional data center and public cloud. Folks, they're on the edge. They're collecting revenues on the edge. It's not just about the hardware. This is a big deal for HP's future because they have nothing outside of hardware. Nothing. Zero, zilch. And they spent $11 billion buying back their own stock over the last 3 years. I want you to think about stock buybacks. Think about a company Dell size, $100 billion, who's spinning off VMware. Okay, they did really well on that ROI. You know what they say about all that? Let me just show you. Dell plans to announce the approval of a share buyback program of up to $5 billion that becomes effective in November upon the expected completion of its VMware spinoff. The company intends to begin issuing quarterly dividend with attractive yield in the first quarter of fiscal 2023, subject to board approval. They're going to do a $5 billion stock buyback. They're a $100 billion company who just sold VMware. And they're still not giving it all back to the shareholders. They're not buying all their own stock back. They're investing in the future of Dell to make it continuously relevant. That's what companies do. They don't become obsessed with buying themselves. They become obsessed with continuous relevance. Listen to this. The company will be targeting an annual dividend of about $1 billion. $1 billion. Dell, a $100 billion company, is going to give a dividend of $1 billion. HP's doing that now. Less than half their size. Is that too much? Are stockholders happy about it because they're getting a temporary gain, or would stockholders rather have a future with relevance where HP can one day be the king it once was? Something to think about, HP shareholders. It will also be aiming to return 40 to 60% of adjusted free cash flow. 40 to 60%. HP is saying 100%. You see the difference? You see the difference in a company that's investing in their future and a company that's investing in driving their stock price up? Folks, am I making it up? I'm not making it up. Go read it. Go read it. Put your thoughts into this. None of the analysts will do it. They're only going to publish what HP sends them to copy and paste in their blogs. So, ladies and gentlemen, I'm going to end with this. I'm going to end with this slide. Unsubstantiated hype is absolutely worthless. And that statement goes directly to HP and its leadership. So here's what I want to suggest, okay? Subscription print hasn't helped at all. Still no real details. It hasn't helped them at all. They're not changing the game on print supplies. We already saw it. It's gone from 24% of its total revenue down to 20% of its total revenue, right? Even though we had some, more revenue coming out of the personal systems business, which is offsetting some of that, but they're flat. They're not growing. They're not changing the game. Any subscription they sell, you have to ask the question, wasn't this customer buying it without a subscription before? Are we just changing the terminology and how they buy something? That's not adding revenue to our coffers. It's adding hype. It sounds good in the press. I'd rather hear them talking about subscriptions around cloud services, not subscriptions around stupid supply business. Something to think about, folks. A3 disruption. Basically, HP seems to have little impact. Where's the A3 disruption you were talking about? $55 billion disruption. Where's that at? What have you really disrupted? Into the marketplace, it doesn't seem like a whole lot. You disrupted a whole lot of resellers with the Amplify agreement. You got some hype and momentum over the Amplify agreement. But what does it really mean? 3D printing. What's the revenue versus the cost reality? We hear about this 3D printing. 3D printing, the HP miracle. What's the revenue from that? What's the cost in that program so far? Are you actually making any money in the 3D printing space? What are the aspirations for the 3D printing space? You lump it all together with the subscription ink toner, you know, it kind of gets lost there. A lot of hype. Units down and personal system prices up. Will HP continue losing PC market share in personal systems? This is a big question to ask because that's where all their growth's coming from. What is the reality of Amplify? Cost versus additional revenue. Ran around the whole world upsetting a whole lot of people with his Amplify program. What does it really mean? How has it made them more money? How has it made resellers happier? What's the real details behind Amplify? It's just, they come up with these buzzwords, subscription print, Amplify program. And they try to create hype. They try to create hype so they can hide the reality, in my opinion. What is the real goals? Buying back stock, and how much more are you going to buy back? Shares are at $33 a share. You going to buy back some more this year? Or are you going to invest in HP's future? Are you going to invest in a continued relevance for HP? My thinking, folks, here's my thinking. When you back out planned human capital cost cuts, new leadership has only increased operating profit by 1.1% since taking over. That's it. That's a fact. New leadership has no real vision outside subscriptions and A3 nonsense and lacks details in their hype regarding those activities. That's all we hear about. No services, reoccurring revenue other than unsubscribed subscription, unsubstantiated subscription print, which, by the way, is a declining number any way you look at it. Doesn't matter how many subscriptions you sell in print. The customers you sell them to are never going to print more tomorrow than they printed today. It's a declining business. Are leaders seeing the writing on the wall and that's why they're all selling their shares? Well, something to think about. Ladies and gentlemen, at the end of the day, we have to look behind the curtain. We got to start going to these OEMs and we got to start asking some questions. The leaders that are in the retail space selling HP products need to start asking HP some tougher questions because you don't want to partner with someone that doesn't maintain a continuous relevance. And I got to be honest with you, folks, Dell's looking pretty good. Dell's looking pretty good if it's just about PCs, if it's about compute. They're in a much better position than HP Personal Systems is. A much better position. Worth tens and tens and tens and tens of millions more. Some things to think about, my friends, and I'll see you all tomorrow because we all know this. Status quo is the killer of all that'll be invented. Don't get stuck in status